There are so many different options for charts in analytics, and historically the most popular ones have always been line charts and scatter charts, but a lot of advisors, when they're using the system, find a lot of value in using a bar chart, mainly because it allows you to look at discrete data rather than looking at the entire cumulative period of, say, 5 years. If you break it down into yearly, monthly, quarterly chunks, you get a lot more information off the back of it, particularly if you're trying to gauge if something's consistently outperformed something else. So in this example in front of us, we've got a client existing portfolio, and I've got a recommended fund solution that I'm offering up to the client. Yes, I can run line charts, but on the right hand side you can flip that back down to bar chart on the right, and there's a few options to be aware of here. I want to run a discrete bar chart. You can do rolling. I want to do year on year, but equally you could do month by month or quarter by quarter, and I want to select 5 yearly periods. And if you click on generate, you'll get a chart again that will show you year on year how that suggested fund has done against where the client currently is at the moment, and we can see that in 5 years it's consistently outperformed it, not just during good times. In these 4 years when the markets were up, it outperformed, but even in 2018 when the markets fell, it fell less than our client's investment solution, so outperformed. Now, coming back to the main screen, it's not just performance you can analyse, it's also loads of different ratios. So you'll see on the right hand side the measure that you're running this on is defaulted to total return, which is performance, but if you open up that tab you can run any number of these different ratios. So if you wanted to look at risk, for example, you could use volatility or max drawdown, the most something's lost over a given period, but let's use volatility. And again, I want to run this on a year by year basis over the last 5 years to mimic the same chart that I just got for performance, and again click on generate. And when the chart loads up, it shows us the 5-year volatility of those two solutions side by side, and we can show that consistently our proposed solution is taking more volatility than what the client takes, and that's probably intentional because on my risk profile is telling me my client should be taking more risk, and that's why I'm offering up this Lion Trust solution. But interestingly, just because it takes more risk doesn't mean it has to take more loss. As we saw in 2018 with the chart beforehand, it didn't fall as much as that client fund, yet it was taking more risk in terms of volatility. Now, bar charts are very similar to line charts in so much as you can go back decades if the data permits you to. So when you're using indices and sector data, then generally they can go back to the 80s, the 70s, the 60s, and the bar chart won't stop. So long as the data's there, it will illustrate it. Now, what I've got in front of me here is showing the Bank of England base rate, kind of mimicking what cash would have done over the last 30 years, what the average house price has done in England, HPI indices. We've got different regional variations back on the indices tab, back on the main screen. I've also charted your average multi-asset fund, which is a mixed investment sector, which is the blue line. And it's quite a nice way of educating clients in terms of how markets behave during different market conditions. A lot of the funds you'll be analysing at the moment and recommending to clients invariably probably haven't been around for that long, certainly since the last big crashes of 2008 and the dot-com crash in early 2000s. So it's a nice way of showing clients, well, look, this is how the average investment solution would have performed, and this is how much it would have fallen during those market conditions, and equally that's how other asset classes would have behaved in the same time period. And another cool use of bar charts is to be able to analyse all of the solutions side by side. There is a limit. You can only look at about 12. But if I have my own in-house models, I might have 5 or 10 of those. I might outsource to another MPS provider. I might use a range of multi-asset funds. I can very quickly put them onto the same chart, and again allow the chart to explain to the client in years gone by, in this case over the last 5 years, how those solutions would have behaved in different market conditions. When the market dropped, which ones outperformed, and when the markets do well, which ones we expect to do better, invariably the ones that take the most amount of risk. And lastly, there's a little feature built within a bar chart that's often overlooked, but is also incredibly useful at analysing particular funds against their sectors, and it's called Fund Within Sector Bar Chart. Now, usually when you're running bar charts, you've got the charting type at fund level, which is ultimately anything you've got selected on the left-hand side will be placed inside the bar chart. But there is another charting type that a lot of people use called Fund Within Sector. So click on that. I'm going to run it along exactly the same basis on a discrete chart basis, total return performance, yearly time periods over 5 years, and click on generate. And it's a bar chart packed full of information, and as the name suggests, it is fund within sector. So over the last 5 years, every single bar is the sector. The bottom of the red bar is the worst fund in that sector in 2016. The best fund is invariably the top of the blue bar, and where blue meets red is sector average. And the fund we're looking at, in this case, Vanguard Life Strategy 80%, sits well above sector average in every single year. So historically, certainly over the last 5 years, it's consistently outperformed the sector average. And much like the standard bar charts, you can flip the calculation so you don't just have to look at total return. In this case, I'm looking at the same fund, the same period, the same type of chart, but I've flipped it. Rather than looking at total return, I'm now looking at volatility. So although the fund was outperforming the average, I wanted to make sure that it wasn't taking unnecessary amounts of risk. And as you can see here, pretty much every single year, it's bang on the average line. So historically, in terms of risk, it's taking the average level of risk, but historically, in terms of performance, it's taking over performance against the sector. So I hope you found that useful. That should give you some ideas on what you can do with bar charts here on analytics. Rather than just using line charts looking cumulative performance, use bar charts to start sifting through discrete data and rolling data as well. So as ever, if you've got any questions on this or anything else within analytics, click on Chat with an Expert in the bottom right hand corner, our live chat. You've got the help desk number under Contact Us in the bottom left. We've got our training team where you can schedule a training session with them, again on the left hand side.